Good morning, everybody, and welcome to Tuesday Training. I hope you're having a fantastic week. As always,
we are live from Austin, Texas, right here in Insurance Syndicate headquarters, and man, we have a great show for you.
Good morning. What is happening, man? It's good to see you guys all on this Tuesday morning. Thank you so much for tuning in. I see you there, Tim. I see you there, Viola. Always great to have you guys. And of course, Tuesday Training is the day that we have a little fun. We try to talk about some actionable content, things that you can actually learn to go put in your business, grow it, make some more money, serve more people, and provide more opportunity. That is what the show is about, taking action now. And kicking off the show, I want to say a big shout out to my buddy Eric Fierro over at DFY for helping support the show. I'm a user of the DFY CRM, absolutely one of the best tools out there. Extremely impressed by it, especially with some of the new acquisitions, I guess I should say, that he's made with Tuesay CRM. They have now combined forces. So in addition to all the wonderful automations and things that Eric has already built in the CRM, he now has his whole back office support team that can help you with problems that come up, help you with custom work. They can help you with telemarketers, dialing your leads, all kinds of stuff. It is absolutely outstanding. And again, I had a little issue, and this was an issue of my own creation. I was working on a new funnel and couldn't get it to snap for some reason. All the settings seemed right. Immediately reached out to them within a couple of minutes. They got right back to me, helped me fix it, boom. And then there we are, funnels live, and we are making money. So great CRM, man. If you're any reason you're an agent, you're not using a CRM, like, come on. Are you really serious about your business? I mean, CRM says it all, right? Customer relationship management. So if you're interested in checking one out, give my buddy Eric a call over at DFY. He will get you a demo, and you can check it out. But with that said, I want to share a couple of real quick news articles with you guys. Not a whole lot of stuff here, but there are a couple of things that I just want to show you real fast. So bear with me just a moment. And this first one right here, this talks about insurance fraud. I always like pointing out insurance fraud. I think it's kind of interesting. But a man in Cordova, Tennessee was sentenced to more than 2 years in federal prison after he ran a $5.9 million fraud scheme. Well, what did Mr. Christopher Brown, who ran a music studio business or music recording business, what did he do? Because he's now been ordered to pay $5.2 million in restitution. Well, let's see real fast. A Cordova man is facing more than 2 years in federal prison after getting convicted of running a multi-year scheme to defraud 4 insurance companies and stealing just short of $6 million. Chris Brown, age 47, made claims to Main Street Assurance Company, saying he lost over $340,000 due to water damage and a purported burglary while running his music recording business in downtown Memphis. He then acquired insurance coverage from Markle Corporation for that very same business, making a claim for $2.8 million for fire damage. Markle paid the claim. He then created a company called Tattooed Millionaire Entertainment, TME LLC, and they let him request insurance coverage without revealing previous insurance claims. With that company, he bought a second Memphis property on Rainer Street that previously accommodated another recording studio and received insurance companies on that property for that music recording business. Later, he asserted an arson, fire damage on the Rainer property and obtained another $2.2 million from Hanover, who paid the claim. Furthermore, Brown retrieved vehicle insurance on a 1985 diesel bus from Progressive Insurance and claimed the bus was stolen. In a settlement, Brown gained just short of $110,000. Authorities determined that Brown made false statements of representation with all 4 insurance companies, including fake or altered document submissions. He pled guilty to mail fraud last year, and he is now sentenced to 27 months in prison, 2 years supervision release, and ordered to pay $5.2 million. I don't know how much fraud affects our premiums as health insurance consumers or car insurance or property insurance, commercial insurance consumers. We're going to ask our guest about that in a minute, see what he has to say. But I always, fraud is rampant. I usually point it out in the Medicare space because it's really rampant there. But here we've got someone right here in the commercial insurance space bringing it up for about $6 million. So I got one more, and then we're going to jump into the meat of the show. This was an article that was recently posted. It's an older article. It's actually back from March of this year. But it was recently posted in one of the Facebook groups that centers around Medicare. And the headline says it all. But it doesn't say it all. The headline is nothing but fear-mongering garbage, which we all should be very, very aware of. I don't want to get on a rant with this, but let's be honest, man. Journalism, in a lot of ways, has really been taking advantage of our short attention spans that we have, especially as digital information consumers. And they love to put out great headlines in hopes that it'll attract attention. I feel like what they're really wanting to do, I'm going to give them a little bit of honest benefit of the doubt here, that they're using a bait headline to get you in so that you will actually read the article. The problem is most of America, I would say, most consumers of digital information, news, whatever have you, they're not reading the article. They're just reading the headline and then moving on with that thought in their brain, that assumption, right? And it's very unfortunate. And if you take time to actually read the article, you'll find very often the headline's garbage. Because if you look at the headline here for face value, it says nearly half of health systems are considering dropping Medicare Advantage plans, which on the surface sounds like 50% of hospital systems are all going to drop all Medicare Advantage plans, right? Which would be extremely frightening if you're an agent out there in the Medicare space with a large book of Medicare Advantage business, a book like mine or many of you other guys out there, right? That headline's going to freak you out a little bit. But if you actually take time to read the article, and I want to give some props to my buddy Justin Brock over in Medicare Monsters for pointing this out, because people had shared this, someone had shared this article in his group, and people were making some onerous comments about it, like what is going on here? And then thankfully, Justin actually took time to read the article and then came back and was able to poke some holes in it. So I just want to mention a couple of things here, because this is what's really important. Right here at the top, like if you take time to actually read this, it's going to tell you, hey, 16% of hospital systems, right? Not half of them, not nearly all half. 16% of health systems are planning to stop accepting one or possibly more Medicare Advantage plans in the next 2 years, right? So out of every 100 health systems, 16 of them are thinking of stopping accepting one Medicare Advantage plan, possibly more, right? And then it further says another 45% said they're considering the same but haven't made a final decision. So you got 45% saying we're considering possibly reducing the number of Medicare Advantage plans we accept. They're not saying Medicare Advantage is out. Nobody's going to accept it anymore. Certainly not half a hospital or health systems. Frankly, that's just bullshit. That is not what the article is really saying. The article is saying, hey, about 16% of them said they're going to stop accepting one certain plan, maybe more. And another 45% are kind of thinking the same thing. Like, hey, maybe we're accepting too many of these plans. And I could probably guess which ones they're thinking of not taking anymore. And it's probably the ones that have ridiculous amounts of prior authorization and issues that create friction in the entire claims process that those health systems probably don't like, right? Possibly weaker reimbursements as well. And you can go through the rest of the article, but that point right there is really what the crux of the article is about. It is not about, hey, half of all health systems are wiping out Medicare Advantage. That is a garbage headline that's designed to create fearmonger, get people chatting, get people talking about it, and so forth. But the truth is, only about 16% of them are actually considering dropping any plans, and 45% are saying, yeah, that seems reasonable. We might consider that as well. Fairly simple. So do us a favor, man. If you are going to be consuming information in this space, sharing information in this space, and truthfully any space, read past the headline, read the article, find out what's really going on in there, and then you can have an intelligent conversation about it. So kudos to that. And with that said, man, I want to get our guest on the show. Super happy to have this guy. I met Brian Kutayiah at a Cody Askins event, probably maybe 2.5 years ago, possibly 3 years ago. If I remember correctly, it was in New Jersey, Philadelphia, Cherry Hill, New Jersey, and I might be off on that. But met him for the first time as kind of in a round circle mastermind, listening to him and his partner talk about some of the things they were doing. I was immediately impressed. Excellent guy. And then I've gotten closer to him mainly through my connection with Joe Campert, who works with them now. I'm not exactly sure what Joe's title is, but he's basically in charge of business development, right? Helping grow that whole business. And we'll discuss that. But I'm super excited to talk to him because there's some things that I want to pick his brain about in regards to leveling up your organization through mergers, acquisitions, through acquiring other books of business to help grow your organization. But also want to talk to him about team development, team building, right? How he's selecting some of these people that he's choosing to put in certain places, the what, when, why, and how on that. And then also like franchising. Like, what does it mean to franchise your business and your opportunity? Because I think about what our growth and what our goals are for Avila. And in the back of my mind, I'm like, is there really a franchise opportunity there? Are we going to build a brand that's so massive that people would be like, man, I would love to run under the Avila flagship in my own town, in this state or that state. So those are some of the things I'm going to ask him. If you got some questions, drop them in the comments and we'll bring them on. But first and foremost, man, let us get the man of the hour on the show. Mr. Brian Kutayiah, how are you, sir?
I'm good, Tony. Good to see you, man.
It is good to see you again as well, man. You're in New York, right?
Yes, sir.
New York State or New York City? Because I always forget.
So technically New York City. I'm in Long Island.
Okay.
So it's still New York City, even though it's really the 5 boroughs and Long Island. They always say and Long Island. So
right.
We're New York City.
Absolutely. Well, you're no stranger to our group. You know, I know you've been on the Winning on Wednesday show with Joe and I before, but Tuesday Trending, we get a few different guests. If you wouldn't mind, just take a short moment, let them know who you are and kind of what you're up to.
Yeah. Hey, I'm Brian Kutayiah. I am up to building a pretty big insurance agency.
Yeah.
It's so how we got here. I was with a captive carrier prior to this, and I had a ceiling, and I couldn't break through the ceiling. But it was good. It was a great place to be in, right? When you get to that ceiling. So then I had a choice. I was like, okay, I can stay here and this is it. This might be my max. Or I can, start over and create a new ceiling.
Right.
And that's what I did. Start over, and now we're, off to the races, and we're having fun. It's stressful, but it's fun and it's exciting because you're doing something new every day.
Yeah.
And it kind of keeps you alive. I enjoy it. So I'm not very much into the singular routine and I'm done. Like I want to keep seeing how far I can push myself.
Absolutely. Absolutely. Yeah. What if just to get it on the table, so to speak, how large is Clearview grown to now?
So right now, I believe, so we just actually completed another acquisition yesterday. Yeah. I think that should put us around the 60 million direct written premium mark.
That is a lot of car insurance. But I know that's not all you do. You guys do all things P&C, car insurance, home insurance, commercial, trucking, like you're in every space, right?
Yeah. Yeah. So we're we were forced to kind of diversify our book, coming from the personal line space. Last 2 years have been personal line market's been crazy. So we're like, okay, commercial is still somewhat open. Let's go learn this stuff, and it's been good. It's been a good learning experience, and now we write a ton of it.
Excellent. So just jumping right into it, like what would you say has been the primary driver behind Clearview's growth, and maybe how that strategy has evolved over the process?
I think a big thing is kind of learning from prior business experience, right? Like, okay, what did I do here that was good? What did I do, that was not so great, right? And like when you're building your first business, you tend to do everything in that business, right?
Mhm.
Like you have to do everything. Like you are the guy, right?
All too familiar with that right now.
Yeah. So if you go on vacation, so the question is asked, what happens if you take a vacation from your business for 2 weeks without your phone? What would you come back to, right? So I learned that from the first business because, you know, I was working 15 hours a day, and I was if I was in there, like it would just be hell.
Mm-hmm.
Second business, I got a little better at not being the guy, and this one, I could despair for a month, and that should be fine.
Right.
Right. So that's the first key is like when you're building a business, you gotta ask yourself like, if I despair for 2 weeks, what's going to happen to my business? Is it really a business or is this just a job? Right. And a lot of business owners are just working a job that happened to be their business. So that's the first step is kind of like, the idea is to build a business to sell, but keep forever. Okay.
Okay. Well, somewhat, but expand on that.
So when you're building a business, you should always build it as if you were building it to sell it, right? Because that's a business that you end up keeping forever. So it's the old adage of, I hate my house, I'm going to sell it. So the realtor comes in and they're like, okay, well, you got to fix this, you got to fix that, you got to fix that, you need this, do that. And then you do all the stuff, right? And you fix the sink and the leaky toilet, whatever, and you paint it and it's clean and the kitchen is nice now. And you did all that work to sell it. And then you look at it and you're like, it's not too bad here after all. I might just stay.
Yeah.
So it's the same thing with like your business is that, we buy a lot of books, and what we end up seeing is that, these sellers, they've built a business around them and they're doing all the work and it just requires so much labor from them until they're ready to sell it. They're like, holy crap, I can't, who's going to buy this? They're going to want me to stay. I don't want to stay. I want to retire.
Right.
And then, they spend maybe another 2 years try to clean up their mess, right? To get it presentable to sell. So last year we bought a book in Westchester and in New York here, and it was good book, lots of commercial clients. But he had no staff. He had 2 VAs. And I was like, okay, it runs on its own. I'm like, is there any employees coming in there? He's like, no. Okay, so we ended up buying the deal, and that was one of our first deals. And so we kind of rushed through it. We just wanted to buy a book, right?
Mm-hmm.
And then he's got these VAs that weren't really trained, weren't really servicing these accounts, didn't know how to service these accounts. So finally I met up with him. We had lunch, and I was like, hey, you have nobody working in this? He's like, yeah, I had 2 employees, but I was talking to the broker and they're like, your numbers are not going to be that great. You need to like cut your expenses to sell this thing. And I was like, are you kidding me? So we went out and hired these 2 employees that he let go to make his numbers look better, to sell his book. And they're great. They're still with us and they're managing the account, but they're the ones that had the relationship with these customers.
Mm-hmm.
So, yes, our cash flow is not so great after adding additional expenses, but we're going to retain it. And we're going to keep growing on that business. So, I would say when you're starting your business, start from day one as if you were planning to sell the thing, build it that way, right?
Yep.
And keep it forever.
That's I love that you said that, because that's the track that we've been thinking on. Grace and I, the first day that we started Avila, we're like, look, what are we trying to accomplish? Like, we went through that whole exercise of, is this just a side hustle for Grace to make some insurance money, or are we trying to do something special? And the more we talked about it, the more we realized, like, no, we want to build something large. We want to build something that is exactly that, something that can create possibly a life-changing or legacy type income for ourselves, but more importantly, that we can use it to affect change for her family back in Colombia.
Yeah.
Right. My family's good. They're all gone. They're either rich or dead. Doesn't matter. I don't have to worry about them. And I don't have any children of my own. Grace and I, neither one of us do. So our whole goal is to help build a legacy for her family that we can affect that type of change. So that was the idea. Like, do we build something that's big enough that we can sell it for a price and then set up, a legacy income for them? Or just like you said, build it to sell, but we end up keeping it forever and living off of that money. So that's an interesting thought process that I think you probably, is that something that you continually back and forth struggle with? You're like, do I want to build this to sell, or am I going to keep it forever?
Well, you don't know, right?
Until you get there, maybe.
Yeah. So I feel like for me, every 10 years in my business cycle, it's like, okay, I want to do something else, right? So if I hit the 10-year mark here and I'm like, okay, I'm done, it's already ready to go. It's packaged up. It's easy for me to exit, right? So maybe I want to do something else in another couple of years. Who knows? I don't know.
Understood. So when you're, are mergers a big part of your strategy right now, or acquisitions, I should say, right? Mm-hmm. That's kind of the main thing that you guys are focused on. So when you're doing that, are you always looking to keep, I guess, the key person or the staff from that previous book in play? Or is there ever a time you're like, nope, I just want the book and you guys are all whatever?
No, we want to keep staff. We want to keep people in place for sure.
Okay.
I think that's definitely, it's easier that way. If they are already doing the work and they have the relationships already, it's much more easier than us, rolling it up to our service team that they don't really have a relationship with, they're not familiar with.
Correct.
But again, it's going to depend on the book. And, when we started buying, we were buying smaller books, which the economics in the small agencies don't make sense. You end up losing money on a small deal. So I would rather, someone buying a deal that's going to cash flow and cover debt service plus whatever key employees are going to keep with it, and still make a profit, right? So the smaller stuff, they're actually a lot more work. They're a lot harder to stabilize than buying, a bigger agency that's already stable, right?
Makes sense.
Less work there. People are always like, well, I can get the small one for a little less. I'm like, yeah, but you're going to spend more time and effort just to clean it up and organize it compared to, spending a little bit more for something that's already, running properly, has staff in place, salespeople in place, service people in place. So I kind of look for those deals now.
Okay.
But yeah, acquisition is definitely a big part of what we're doing now. I think we were forced into doing it when we started up in mid 21. The market was still open. So we were writing a ton of business and we were growing a ton organically. So we never thought, we were like, oh, why buy a book? Like, we're doing 10, 20 million a year in new business. That's crazy. Right? And then, you hit the hard market and basically everything came to a halt. Nobody, especially in states like New York, Texas was probably a couple months behind. We went from writing any and everything to writing nothing.
Wow.
Nobody wanted a single auto, a home. It was insane. So I was like, okay, well, I want to keep growing. So we can't write, a ton of new business. We can't keep growing this way. So then acquisition needed to be a part of the strategy. And that's what we did. So the hardest deal is your first one.
Makes sense.
Yeah.
Like anything else, right?
Yep.
The hardest application is the first one. The hardest acquisition's got to be the first one too. And you probably learned quite a bit going through it.
Yeah, there was a lot that went in. So, I remember when we first, we had cash flow, numbers seem okay. But we couldn't get approved on our first deal. We couldn't get approved for a loan from the bank because we only had a year in business, and they were like, the numbers look fine, but we need 2 years tax returns, and we need this, we need that. So we worked with the bank, and then we're like, okay, cool. Well, we know let's make sure our numbers look, good for the bank. So, a lot of people make the mistake of saying, all right, it's my first year business, the second year business, I'm going to take a loss. you take a loss, you're not getting a loan.
Right. Of course not.
You're not getting a loan. The bank's not. Why would they lend to a, losing business, right? You're probably not. But, typically when I start a new business, there are losses and we will take some losses.
Yeah.
But, thank God we were, profitable from day one and just kept scaling that way. And that really helped us out. But then understanding like what the bank needs, what they need to see, all these things, all these checklists that you need to go through. But yeah, it took about a year to get the first deal in and finally close on that. Understood how to work with the bank, understand how to do your financials, keep your reports. Like they're on you too. You get like quarterly reports, annual reports.
As far as with the bank that you have your loan with?
Uh-huh.
Oh, absolutely. Yes. They like to follow up and check on how their money's being spent.
Yeah, exactly. Which is good because it kind of, you're like, okay, cool. We're profitable this quarter. Cool. Let's save this up. And, next quarter. Okay, we're good. All right, nice. We got down payment for another deal. Let's go buy one. So that's a way to compound and scale. I like it. I think it, allows you to grow a lot faster.
Yeah.
And again, you have to have the right team in place. You have to have good management, good staff, because you can quickly lose your shirt, right? You buy a deal that goes south, and sometimes they do. So
when you say go south, like you buy the deal, you spend the money, but then what, all the business washes out somewhere else? They all move?
Yeah, I mean, it's hard for that. I mean, you'll have, I remember one deal we bought, the company was starting to non-renew. Again, we had no control over this. The seller had no control over this. I think they non-renewed about 30% of the book. Yeah, that was not fun.
No.
So, at that point you're like, okay, can I renegotiate with the seller? Probably not.
Right.
Yeah. So things like that's outside of your control. There's nothing that you can really do about it.
Sure.
We did our best to rewrite a lot of those customers, but we lost a ton of them. We couldn't get to them on time.
Makes sense. So thinking of it as a marketer, right? Thinking of, okay, if I'm selling to consumers, I have an ideal consumer. If I'm recruiting agents, I have an ideal agent. But if I'm acquiring businesses, I assume I have an ideal target, right? So what does that look like for you? Like, what is your ideal agency that you want to acquire?
So,
and how did you come up with that?
Well, I don't know. It's hard to say, right? So the issue that we run into is that we don't necessarily find a lot of sophisticated sellers. What we do find is someone deciding they want to sell and have not prepared to sell, right? And they say, well, my top line revenue is this, and I want 2 or 3 times that. I'm like, well, it's not your top line that matters. It's what you're taking home. How much money are you making from this book? Right? So we have to look at that. And, a lot of them don't have a great accounting process where they're not really sure exactly what they're making.
Right.
So we're finding ourselves, adding pro formas onto these deals to make the numbers work. Right. And the issue with these sellers is that they go and then they end up hiring like a broker, and the broker's like, yeah, I got a ton of buyers, don't worry about it. Like, we'll yeah, the deal looks fine. Like we'll do some fake numbers, and not fake numbers, but they'll embellish the crap out of these numbers.
Sure.
And, you're looking at the actual deal and you're looking at the broker, and their sim, and you're like, there's no way you're not operating at a 50% profit margin. Like you're not. So, I feel like sellers need to do a better job at preparing to sell.
Okay.
I would say that's at least a 2 or 3 year process. Like if you are watching this and you're thinking of selling your book in another, 2 to 3 years, like you should start your process now.
Do you think it's a 2 to 3 year process to sell your agency or your book? Why do you think it takes so long?
Because, you have, if you really want to get top dollar for it.
Sure.
right, then it's going to take certain things that you're going to need to have in place,
Okay.
right? Which will probably take about 2 years to do, like getting your accounting done properly, getting some key staff in place, getting some automation in your business where, I should be able to walk in and just hang my hat and business should keep operating.
Right.
That doesn't happen. And there's nobody that's prepared to sell that way. And we would pay a higher multiple for a deal like that if,
Of course.
we walk in, hang our hat, and cool, everything's going, right? Now we walk in and we're like, okay, bring the paintbrush, bring the broom, bring this, bring that. And there's so much more work that you have to do to integrate with that agency and your agency and staff and training staff. And, it's a lot. There's a lot that goes into it. There's, we have somebody that's like full-time. His full-time job is like running numbers all day long. Yeah.
Makes sense.
Yeah. So preparation is key.
Makes sense. In regards to getting the capital to buy books, are you always looking outward to a loan source to help you fund that and run the numbers that way? Or are you like, hey, now we got enough liquid cheddar of our own that we can do that? Would you say there's a pro or negative to either side of that?
Yeah, I mean, I always believe in using debt.
Okay.
Right. I always believe in using that. Save your cash, reinvest your cash. Right. So if the bank's willing to fund the deal, then you take the bank's money.
Yeah.
Right. You make money, they make money, everybody's happy, and you need that relationship to continue. Right. So if if you're a borrower of, I don't know, between 100 and 200,000, then that's mostly what you're going to have access to. Right. If you can show a bank that you've borrowed 10 million and you've managed that and you're a good steward of that 10 million, then guess what? The next 10 million is easy to get.
Right.
So you need that record to show that you can manage. And then it gets easier to get, money from there. So, but if you're playing within, 100 to 500,000, then that's really all you're going to have access to. So yeah, we don't use a ton of cash on our deals. But if the bank's going to lend on it, we're good.
Right. And you just take care of the down payment piece at most, basically.
Mm-hmm.
Right.
Mm-hmm.
Makes sense. Excuse me. At what point, and maybe this started from the beginning, I'm not sure. At what point did that start to, or at what point did you start to realize franchising opportunities within what you were doing?
So we started with the idea of franchising.
And see, when I think of franchise, because I'm an idiot, I immediately think of McDonald's because that's the first franchise I was ever introduced to or heard about.
Yeah.
Right. So, and I basically understand the concept of it, but I'm probably still wrong.
Yeah.
Because in my mind, I'm like, oh, a franchise opportunity means it's a brick and mortar with my brand on it every single time.
Right.
Right. And that may or may not be perfectly true. I'm not sure. But again, and kind of at what point did you realize that's a strategy that you wanted to pursue? And maybe how's that going?
So it was a strategy that we wanted to pursue from day one, because I come from the franchise space. So my first business that I actually opened was a franchise. I bought a franchise, and I had no experience in that industry, and I was like, yeah, it seems like a good business. So I bought the franchise and I ran it.
That was in the tax space, right?
Yeah, yeah. And
that Liberty
Tax. Mm-hmm. Yeah. So I bought it and ended up opening up 5 offices and and scaling that, and that was fun. But I saw what they did there, and I was like, okay, this is a great, it's a great concept. The idea of franchising to scale kind of makes sense because you can get there faster, right? So again, it depends on what business you're in, because there's some businesses where you're better off just owning everything and not franchising, right? like Panda Express, like these, they own all their locations, right? Starbucks, Chipotle, they own all their locations. And it's like, okay, it is probably better to own it all, right? But we started with the idea of franchising because initially we were going to work with these tax offices, and have them offer taxes and insurance to their customers.
Mm-hmm.
We didn't pursue that because of the market. Like I said, the organic growth is tough. Starting independent agencies starting today, starting from scratch, it is very difficult to grow unless you have great referral sources, or you've got money to invest, you understand the economics of the business, you know the return is going to come. If you don't have it and you're doing onesie twosies policies here and there, it's going to take you a long time because the market is not so open where, you're writing 100, 200,000 a month in premium just falling in your lap. It's going to come back. We're starting to see, we're starting to see the light at the end of the tunnel. We're starting to see some markets opening up. We're starting to see some carriers who've been out of the game for the past 2 years returning quotes. But the competition is still not there yet. So once competition comes back, when, everyone's like, well, Progressive's taking so much market share. We need more business. And then now your reps are calling you up saying, hey, we're going to give you guys additional comp, like just quote us. I need you to write, 10 policies this month, whatever. That's not here yet. When that comes back, it'll be easier. It'll be more of a priority for us to, sell the franchise and bring in scratch agencies. But now it's not a priority for us to bring in scratch agencies. What we want to do is the agencies that we're bringing in, or anyone that's, starting with us on the franchise side, we want to pair them up with a book. So we'll go out and find a book and buy it with them. So this way they have some revenue to grow.
Buy it with the franchisee.
Mm-hmm.
Okay.
Yep.
What other type of, like, I guess, support structures or mechanisms? Because when I think of franchise, right, my mind immediately goes to like a McDonald's where everything is exactly the same in every single location.
Yeah, we're a little bit more flexible because we don't have to go and build out a massive storefront and,
right.
Do this and do that. Our franchisees definitely need a commercial location, but times have changed, man. I've got 5,000 square feet in this office, and there's like, I can't get any.
Most of it's empty.
Yeah, most of it's empty, right? Everyone's like, well, I'm fine working from home, and their numbers are great. Like they're fine working from home. So that commercial storefront stuff, building out an expensive storefront, it just doesn't make sense anymore. You can market online, use social media, buy some leads, whatever you got to do, referrals, realtor, mortgage relationships, whatever it might be. You can be anywhere and sell that, so we don't have crazy build out or anything like that. It's just, we give you the training, give you the support, CRM, agency management system. And obviously the biggest thing is market access, right?
Right.
The carriers that you can sell and grow your business.
Yeah, makes sense. That was when I was working in the wholesale side in the Medicare space. That was kind of my angle. Like I wasn't really looking for scratch agents that were brand new to Medicare and didn't know anything about it. Right. And had never been an independent broker before. Because just as you said, like it's a different ballgame now, especially now. It is so much harder. There's more competition. You're going to have money behind you to invest in yourself to grow your marketing. And you would need a phenomenal referral source. Right?
Yeah.
20 years ago, sure, you could get into the Medicare space, get your license, and you could get up and running very quick. But it was a different time. Like that was still paper apps, and the internet was still kind of brand new. Like people weren't buying insurance online yet.
Right.
And the fast forward to where we're at now. So when you're working with a potential franchisee, or maybe you're looking for someone, or someone contacts you and like, hey, Brian, I want to get on this Clearview thing with y'all guys, man. I see what y'all are doing. I want to be part of it. Like, what are some of the key indicators that you're looking for out of that person to make them a solid franchisee candidate for Clearview?
So now we're a little bit more, obviously from prior experience, we're not one of those franchises that they're like, you have a pulse, come on in, right? we that actually end up costing us more money than we make on it.
Absolutely.
You spend a lot of time and effort and resources supporting, the bottom 20% that aren't going to cut it or make it or produce. So it's a waste for us and them, right? Like it's not going to be a good fit. So, we look at, when we're talking to folks that might consider joining us, we're looking at what their goals are, right? What do you want to do in this industry, right? Do you understand how it works? Do you understand that this is a different market and there's going to be some maneuvering, right? Like, when I have someone that comes to us and says, well, I see there's 100 carriers here. Like, I want everybody tomorrow. I'm like, that's not going to happen. Like, show us what you can do first. Right. So again, we want people that are going to be willing to invest in their business, because we're going to invest in you and your business too. Right. And that's the biggest thing. We want to make sure that they have the experience and the wherewithal to build a business like this, because it's a great business. It's probably, I don't know, one of the most rewarding businesses that I've ever been in. But I understand what it takes to build, right? Half of the people that I talk to don't understand what it takes to build. And that's not a knock on them. I'm not saying, maybe you need to go out and get the right education on what it takes to operate a business, right? But yeah, we'll spend the time, energy, and resource to make sure that you are successful. But 80% of that work will come from your effort.
Absolutely.
We can give you all the tools that we have in our toolbox. It's gonna be what are you gonna do with it?
Yeah, absolutely. I can give you all the resources. I can give you all the tools. I can give you the map, right? The process, the system. But I can't plug you into it. You have to do that yourself, right? So we had a question come in from the comments here, and the question is, are his franchises or your franchises actual agencies, or also made up of individual agents that don't want a full business, they just want to sell?
Yeah, no, we hire producers all day long. So you don't have, to come in as a franchisee if you want to work with us. Like I said, we're a little bit more strict on awarding franchises.
Sure.
Because we don't want you to come in and you're like, oh my God, I only have like one market in New York that's going to write business. Like, it doesn't make any sense. But yeah, we will hire internal producers for sure.
Okay.
Yeah.
And since you brought it up a second ago, right, what it takes to operate a business. And I want to go back, because you said something earlier. You said that I'm finding, as we go out and we find these agencies that we're looking or maybe interested in requiring, you said, I'm not running into sophisticated sellers. I'm running into unprepared people that want to sell their business. And then you said most people don't really know what it takes to operate a business. So what does it take to operate a business? I know you can't fit that into 5 minutes, but what would you say?
I think the issue is, like, you get started, but then you never take a step back and think about how to run your agency properly, right? Because you just show up every day and you're reacting.
Grind.
Right. Yeah. I think taking a step back and trying to be proactive kind of helps. So again, it all depends, because there are different levels, from 0 to 200,000-300,000 in revenue. Yes, you should be grinding. You should be doing all this stuff. And as the business become profitable, then you should start, delegating those jobs that you're currently doing and paying for it, right? So yes, you're going to make a little less money in the short term. So I think that's the issue that people can't, like. The average agency, maybe it's around 300,000 revenue, and they can't get past that 300,000 to 500,000 mark. And to get past that 300,000 to 500,000 mark, to go to $1 million, $2 million in revenue, you have to take yourself out of the picture, right? So if you get to one level, then you should hire for something that you're doing, right? If you're doing all the sales and now you're at 300,000, then you need to hire a salesperson. And they need to start doing all the sales, right? If you're still taking customer service calls and you have an amazing relationship with your customers, then you get to that next level, then you need to hire for that position, right? So what we find is that a lot of people, they're like, well, I don't want to spend the money on it because now I'm finally making some good money. And they think like, okay, this is an expense. It's not an expense, it's an investment, right?
Mm-hmm.
Because you're investing in this employee that's going to take the stuff off your plate now, so you can get to the next level, and then you'll make more money that way. So it's not, it's a short-term sacrifice for a longer-term
For
gain.
long-term gain, right?
Yeah. But if you set up your agency correctly, and it's like any other business, it doesn't have to be an agency, it could be any business, right? Once you get to a certain level and you've exhausted a position that you're doing, that you're fulfilling, and you have enough cash flow coming in, then you need to hire somebody for that position. And that's it. You keep hiring. Hiring. But that's the hard part too. It's like finding good people to work.
Finding good people that are willing to work can definitely be a challenge. Absolutely. Would you say that there is a certain, let's just say, profit margin that a business needs before they should even be considering acquiring another book of business?
Yeah. So one, the bank will definitely want to see that you are profitable, right?
Yep.
So a lot of people think, okay, hey, I'm going to go buy a book, and the bank's going to use that book's number to lend me the money on buying that book.
Correct.
And they're going to say, well, you're better off just going from zero to buying that book. You're going to have a better chance of buying that book if you have nothing. But if you already have something, they're going to look at the numbers of what you already have and say, well, you lost $70,000 last year, right? You're buying this one for, $300. So they're going to minus that $70,000 that you lost and work it into that number that you're buying. So now you're buying, $230 in revenue instead of $300. And then the numbers have to work on $230. So your multiple that you're buying for has to be, well within reason for you to be covering debt service, payroll, rents, whatever expenses you might have. The banks typically look for agencies. They want to see profit margins between 30 and 40%. It's kind of like the sweet spot.
Okay.
Mm-hmm.
I like that. All right. I love calls like this because I'm basically getting 45 minutes to an hour of coaching for things that I am preparing and thinking about in my near-term future. So some of these statements, like the 2 to 3 year thing to get prepared to sell, is shocking. But then you said some of the things that you recommend people prepare, and I'm like, oh, I'm doing those things now. Cool, good. I'm on the right track. So a little pat on the back, so to speak, that I'm in the right direction for what I'm trying to accomplish. Maybe I'm not as dumb as I like to let people think I am.
Yeah, no. I mean, I don't know. I don't see, there's not a lot of information in this space. We have companies like Marshberry and stuff that will charge $15,000, $20,000 for a valuation. If your book is only like $200,000-$300,000 in revenue, it's like, that doesn't make sense to pay $15,000 for a valuation,
right?
Because you're like, it's very simple. That's going to be a multiple of top line revenue. Because
right,
if I go and say, what's your EBITDA, and they're like, well, I don't know. Those books are smaller. You can buy it for a multiple of top line revenue, and that's really what they sell for. We're thinking, we did. Joe and I did an acquisition workshop. It was a Zoom call for an hour or two. I had a bank on there, myself, our CFO. We kind of ran through the numbers, and it was good. It was very well received. Everyone was pretty happy about it. I myself spent last weekend at acquisition.com with the Hermosis.
Okay.
It's fun. So they have a scaling workshop that I went to, and it's so funny because all of the first day was really just stuff that we've done from day one, and I was like, oh, can I get my money back? I already know this.
Confidence boost, maybe.
Yeah, no. It was a good. I was sitting there. I was like, man, we should probably do something like this for insurance agents, for insurance agencies, right? On planning. So they had a bunch of different people in the room, and obviously a lot of coaches and speakers and things like that. Odd types of businesses. But these are people that they were teaching on, how to build your business basically without you.
Right.
Yeah.
Absolutely.
Yeah.
Absolutely. Well, listen, we're getting close to the top of the hour, but I got one other quick question for you, right? A little off the cuff here. You're an entrepreneur. You've been doing very well and you continue to grow and seek opportunities. What is probably the craziest idea that's running through your brain right now that you're thinking of executing on, but you're not really sure yet, but you're excited about it. You just haven't pulled the trigger maybe.
Well,
I got to know there's something going on, whether it's a new process in your current business or it's something completely different that you're already thinking about. But what is one crazy idea in your head that you're thinking about?
Are you reading my mind? So it's so funny that you say that. I'm actually going to have a call with the team this afternoon to discuss that. So I'll tell you. So I spent a lot of money to go to acquisition.com, right, for this workshop, because what I was trying to solve for is, hey, how do we better help our agencies, our franchisees? How do we solve for this sales and marketing aspect that I think that they're good at, right? And I was trying to go there to learn that, and it was not that. It was, I already know this stuff, right? We're already doing this. But one thing that I thought was interesting was, they had a room full of business owners.
Mm-hmm.
And they now are essentially a private equity fund that look to buy businesses to add to their portfolio. And doing these workshops was a part of that strategy. And so I was sitting there and I was like, oh, that's brilliant, right? You're basically bringing all these businesses that you may want to buy or partner with because you have some skills and resources that they're looking for. And I was like, well, I want to buy insurance agencies, and why don't I do a workshop to teach insurance agencies how to scale or how to acquire? And then maybe I might have some agencies in a room that might want to sell, and great, we can buy it. And then we might have some agencies in a room that want to buy, and we might not want to buy it, and they can buy it. and we can talk about scaling and numbers and, planning and preparing and all of that stuff. And we can teach you everything that we've done from day one to take us, from 0 to 60 in 3 years. So that's what I'm that's exactly what I've been thinking about, like, tirelessly the past week.
I like it. No, it makes sense. I don't think it's that crazy at all. Actually, that's a great idea. It's the same. It's a much more complex version of it, but it's the same concept as running a seminar to bring clients in to learn about your product and services so that you can sell them. It's very similar as far as the structure goes. It's just a much more complex environment or problem that you're solving there. And
I think we can add a ton of value to folks that are coming up in the space that want to do what we're doing. It's and the good part is we have the relationships that we can already introduce you to, right? Which is nice.
Yeah. Well, 0 to 60 million in 3 years is pretty amazing. Did you start scratch yourself, or did you start with the book of business that you grew?
No, we started scratch.
Okay.
Both ways. So started Allstate scratch, built it up to about 2 million in premium.
Yep.
In about a year and a half, then sold it and bought a $4.5 million book.
Okay.
And that was nice, and managed to grow that to about 10 million. Took about 6 years to do that.
Okay.
Yeah.
Awesome. Well, man, it's been a super pleasure. I really appreciate you coming by and chatting with me for a bit. For agents that are out there listening, because we definitely have some that have been listening and popping in some questions, and they want to reach out to you, what's the best way to get in touch with Mr. Brian Kutayiah?
Shoot me an email. It's just brian@clearviewinsurance.com. Happy to connect. Find me on Facebook, Brian Kutayiah. Probably the only Brian Kutayiah on Facebook, so it'll be hard to find.
Absolutely. Well, you heard that, guys. Brian at clearviewinsurance.com. If you got some questions about what it takes to franchise, maybe you're looking to join him and his crew, hit him up right there, Brian at clearviewinsurance.com, and he will jump right back at you, man. Thank you so much again for stopping by, man. I can't wait till we get to share some physical space together again and get some of your oxygen and see what it is that you're breathing that may help light me up some more. So
Thanks,
thank you much. You got it, buddy. Have a great week. Thank you guys for tuning in. We'll see you next time.